Hello and welcome to this TIA Markets daily commentary for the 18th of February 2020. The US President's Day holiday got the week off to a slow start. US equity and bond markets would be closed and FX would grind to a virtual halt once Europe had gone home. I didn't see a lot of point in dedicating an entire commentary to nothing, so here we are on Tuesday already. And the day begins with the RBA reminding everyone that rates are historically low in Australia, but still could go lower further, and citing potential coronavirus effects on the economy. Aussie drops from 67.15 down to spot 6674. Apple would put out an earnings warning stating it was unlikely to meet first quarter revenue forecasts due to the coronavirus disruption. And so the tone for the day is very much set. The European session would focus on data from the UK and the Eurozone. Better than expected employment data in the UK saw sterling rally strongly from 129.80 to 130.48. However, euro area economic sentiment data would be on the weak side, initially taking euro down from 108.35 to 108.20. Still no fireworks though. But then the US gets going and maybe looking to make up for a lost day, are ready to test euro dollar resilience. A stronger than expected New York Empire manufacturing number would be the catalyst for FX to really get going, with euro dollar dropping sharply from 108.25 down to 107.86. Euro crosses would also sink, with euro yen leading the way, falling from 119.05 down to 118.46. Gold would be the main beneficiary, registering some impressive gains, or jumping from 15.80 up to a high of 16.05. Once again, it's a tale of low US yields, as well as general economic nervousness, that has gold moving higher. Stocks were always going to have a rough day after Apple's revenue warning. The DAX would close down by over 100 points, and the Dow Jones would follow suit, down 165 points at the close. The tech-heavy Nasdaq would buck the trend, ending flat on the day, courtesy of some impressive gains from Amazon. As the day's action drew to a close, the dollar was once again the standout performer in the FX world. Not even sterling could hold its earlier gains, closing back at 130. Euro did have a squeeze back up to 108.25 at the European close, because the market was caught a little short. But by the New York close, Euro would finish down at 107.90. Dollar yen would have a subdued session, but still close at 109.88, and gold would end at 16.02, just marginally off its highs for the day. More the same to come. It would be tough to argue at this point, but you never know. Stranger things have happened. Moving on to a technical piece. As gold was the main mover, let's revisit an hourly chart for the yellow metal. As you remember, our last pop over was 1600, which was here for you, those of you be able to see the chart in front of you. Was back in January, when the US and Iran were reminding us how much they dislike each other. Since then, we have retraced it back down to this line here at 1535.68, which was a high back in September of 2019. We broke sharply up through it here, and then we've retraced back to it almost perfectly before doing a little bit of toing and throwing. And then we have today's move up through 1590 and 1600 up to the 1605 level. Obviously, the first target will be the high in January at 1611.49, and then above there you can see this line that disappears off back over here. If I was to extend the chart on a daily chart, you would see that would take us back to March of 2013. So this is some long-term resistance on the immediate radar. So keep an eye on both those levels over the next couple of sessions. And as always, there are plenty of ways to play it, but that, of course, is, as always, your decision. Hope everyone had a good day, and look forward to speaking with you tomorrow. Cheers.